Let's go to Chicago now and talk to Bob Iaccino. Well, we'll start off with today's massive deal in gold. Bob, it's great to see you. Of course, Bob is Chief Market Strategist at Path Trading Partners. Bob, what's your reaction to this deal? I know you're not an equity specialist.
No, I'm not. I mean, we do trade some equities, but anytime there's an equity where I can get pure exposure in the commodity, I'd rather trade the commodity. I mean, as evidenced by how poorly some of the oil companies did when crude oil was up 70%. Having said that, I think Barrick and Randgold, this particular deal to me seems to be a little bit of a flat to bearish call, medium to long term, on gold itself. The two companies have been known to be very good at keeping debt in line and keeping costs in line. And this to me seems like the two of them just want to get together and get better at it, especially Barrick, which your earlier guest said, and I agree, has struggled a little bit lately, especially falling behind Newmont in terms of new mines. So I like the deal from a perspective of they keep costs, they keep debt in line. Even if gold falls a little bit, they can keep the share price kind of elevated.
Although I think you're being a bit kind to Barrick there. They have had trouble. They brought down their debt, yeah, but debt was a major knock a few years ago. Got to get to oil with you there. I mean, oil both in North America and worldwide close to 4-year highs now.
Yeah, Andrew, I misspoke earlier. I'm the one who told you WTI's at 4 highs. It's not. Brent is. WTI's close to the highs of this year. But having said that, I've been watching that. No, that's my fault. I'm the one who told you that before. I wanted to make sure everybody knows. That was me that said it. And I misspoke. It's Brent. And now, the thing I watch whenever I see Brent snap up like this is that spread. Because we've had plenty of times where that spread is kind of, Brent WTI spread is kind of widened out to double digits, but it generally can't stay there, especially considering the production we have in the U.S. now. In the past, you just couldn't get more production. We're continuing to get that. That spread's going to tighten up. The whiplash trade will be in WTI. WTI has broken out, so it's likely to approach the highs given the geopolitical tension that we saw with the Iranian terrorist attack. It's not just OPEC. That terrorist attack is a very big deal for Iranian production and Middle East production in general.
Yeah, that's interesting, isn't it? Right in the country. I know I've seen headlines, that awful expression, regime change. It might be emanating from some in the White House. We won't go down that road, but that does seem like a big deal. A strike right at the heart of Iran like that.
Absolutely, and you know, this seems to me, given OPEC's sort of middle finger to President Trump in terms of production. Now, doesn't mean they won't increase production, they're just not announcing it. We already saw Russia increase production to post-Soviet highs. They took up almost all of the 1 million barrel agreed upon increase. Russia already took that. So I do expect Saudi Arabia to increase a bit, but I also expect President Trump to release SPR barrels, Strategic Petroleum Reserve, because that's something he can do unilaterally, and he has shown the propensity to act unilaterally. It's the kind of, I hesitate to call it reckless, but it would be a little bit of a surprise to the market. This is the way he acts, so I'm actually expecting this, and that'll probably widen that spread and keep it wide a little bit longer than normally it would be.
And we've only 30 seconds. Would you be a buyer of copper on a rally over relief about these sanctions not being as severe? Sorry, we've only about 25 seconds, Bob.
I'd be a buyer on a dip of copper. I think the rally we saw last week was more about the Chinese stimulus we've been hearing about. It's probably going into effect without being reported on.
Right, and as you say, WTI, it's still down. It was like around $91 the third quarter of 2014, so we're still off about $20, as you say. Bob, always great talking to you. Thanks very much, mate.
Great to be here, Andrew. Thank you.
Bob Iaccino, Chief Market Strategist at Path Trading Partners.